It's a great earnings cycle. We're coming in just under 22% right now, and it's all the sectors you want to see doing well.
22% year-over-year.
Year-over-year growth for the third quarter. It's got great strength. You got 11% growth in consumer discretionary. You got 40+% in the financials. You got technology at 24%. I mean, put aside energy, which is 90%, which kind of skews it. But it's just a really good earnings report. And yes, we may have hit the high water mark in terms of earnings. Next quarter, you're looking for something on the order of 17. Then you drop to 8 and 7. Those are the expectations. We think those are low. The real question is valuation and what happens with interest rates. But yes, earnings basically lifted us up out of that bad news we had that, with the 10-year driving stocks lower. And it was a robust. I think this is going to be a robust quarter, and I think the next couple of quarters are not going to be as modest as they are right now, but it'll be dependent upon the economic activity.
What about the outlook that we're hearing from companies? Is it something that they're stepping away where they don't have the clarity, or are they pretty forceful about where they see things headed in the next 6 to 12 months?
If I can tell you what I think what I've heard is that they're under-promising. I definitely don't want, I think they don't want to get caught. But I think a lot of it's predicated on, what kind of economic growth. What I like to see is the revenue growth. The revenue growth numbers, by and large, been pretty strong. They'll figure out how to make the earnings work. They have enough.
Although revenue has actually been missing expectations. 35% of the 85 of the S&P 500 companies that have reported so far have.
But they've been higher. Expectations were high, but the numbers are actually quite good, what we've seen over last cycle. So, we feel pretty good about that. And the other thing, there's a little bit of an accounting lever that you're going to see. You're not going to get the big boost that you saw because of tax reform, but one thing you are going to get is the CapEx deduction. We're seeing a lot of CapEx, and that'll allow companies quite a bit of maneuverability when they're shaping their next their earnings as the next couple of quarters come up.
Stephen, is that enough for you? If you hear those things, does it make you feel like there is more room to run for the stocks?
Yeah, so I think we've had a nice pullback here. It's never great to have a pullback or a correction. The small cap stocks are down about 11.5%. But if GDP stays above 3%, which is something that we're looking for, we're going to put up, mid-teen to 20+% earnings growth for several more quarters to go with 5 or 6% revenue growth. And so I think, given where valuations have come down to, broadening out of earnings, I think we do get a nice bounce in November and December. We always have a market pullback in September and October as we start to worry about the next year's earnings numbers. So pre-announcements will theoretically run higher than average. Well, if you look at pre-announcements for third quarter, it wasn't any worse than second quarter or first quarter, but everybody's very much focused on that. I agree where companies are under-promising, and they're going to beat their numbers as you get to fourth quarter, and they're bringing down their 19 numbers.